Hello, I'm Alton Bell, the founder of Bell Tax Accountants and Advisors. I'm an IRS enrolled agent, and I'm going to share with you 3 tips to make sure that you stay off the IRS radar and you don't get a dreaded audit notice from the IRS. Tip number 1 is reporting all your income. You want to make sure that when you visit your tax professional or when you're filing your tax return that you want to include all your income. And when I mean by income, I mean by W-2s, 1099s, or any type of investing that you did. I understand there's a time where we may have side gigs, multiple jobs. Make sure that you collect all those W-2s before filing your tax return. And also with side gigs, if you get 1099s from any of those specialties like Uber, Lyft, or things of those nature, make sure you include that on your tax return as well. The reason why I say that is because every year the IRS does an income matching. If they see that you got multiple W-2s on your tax return, you got one W-2, that's not matching up. Guess what you're gonna get? An audit notice. And in that underreported audit notice, it may open up another can of worms where they may question other things on your tax return to say, is all this legitimate? So let's make sure that we avoid all these mistakes, report all of our income. And for all my investors and crypto bros, let's make sure that we report all those transactions. On the first page of the IRS tax return, 1040, they ask, did you sell any digital assets? Yes or no? They just want to test the waters, because a lot of times, a lot of these financial institutions report those transactions and they want to make sure that it's matching up against your tax return. So let's avoid those mistakes. Let's not try to get too cute on our tax return, and let's make sure that we have a solid tax return initially so we don't deal with the IRS and have to go through a dreaded audit. Tip number 2, charitable expenses. Let's make sure when we're reporting our charitable expenses that it's a reasonable amount. This is a very highly audited item that the IRS looks at. Every year they may look at the amount that a person may make compared to the amount of charitable expenses that they donated, and which rolls up into what the IRS uses is called a DIF score. That's basically saying if your score is high, you may get audited. So for example, if you made $60,000 and you donated $20,000, that's a third of your income. How likely is that of a person who made $60,000 to donate $20,000 to charity? You may have gave it to your church. Great, hallelujah. If you got that, let's make sure that we have documentation for that. Also, you may decide to give to someone who's homeless or just help out a friend or family member. Just because you gave it out of your heart, it doesn't make it a charitable expense. It has to be donated to a tax-exempt organization. Okay. Tip number 3, round numbers. On our tax return, we have the discretion to deduct certain items that we may have expensed throughout the year. It may be for medical, it may be for charity, you may have a small business, you may have a rental property where you report all these different expenses. If you just went through your tax return, told your tax professional, hey, yeah, I donated $2,000 here, I spent $3,000 here, I spent $4,000 here, the IRS may take a step back and say, all his itemized deductions or all these expenses that they're writing off are round numbers. That may trigger an audit notice. So let's make sure that when we're reporting this, that we're keeping our head above water and we don't get visited by the IRS. It's a dreadful process and I hate for you to go through it. And the bonus tip I want to provide is mileage tax deduction. Every year the IRS comes out with a table of how much business mileage is tax deductible. Let's make sure that we're using some type of system to track our business mileage. There's tons of apps out there that can track your mileage. So at the end of the year, you can give a summary to your tax professional and you can write off how much the business mileage is. Let's not ballpark it and say, oh, I drove 10,000 miles. Mileage is a very highly audited item. So let's make sure we have our ducks in a row when we're writing that off, so we don't get an audit letter and you don't get it audited by the IRS, because I hate for you to go through that. I hate the process and you're gonna hate the process even more. Let's make sure if you need assistance from me or my team that you visit Bell Tax Accountants at 855 829-2355. Thanks for tuning in. If this video helped you in any fashion, make sure that you like, save, comment, share, and subscribe to Bell Tax Accountants and Advisors. If you need a tax professional, once again, reach out to Bell Tax Accountants and Advisors at 855-829-2355.